Good morning, everybody. This is Jack Leeson with Startuptrading.com. It is 9 o'clock in the morning on Monday, October 5th, 2020 here. Economic news at 10 a.m. ISM non-manufacturing PMI will be our first Red Star News event of the week. And then this evening, we're going to have the cash rate and the RBA rate statement at 11:30 out of the Australian dollar, as well as trade balance at 8:30. And then tomorrow, annual budget release for the Australian dollar. ECB President Lagarde will be speaking in the overnight at 4:35, and then again at 9 a.m. in the morning. And then Powell's going to be speaking. So those are the important events over the next couple days here. Just titled this video, "The Russell Leads." We'll kind of talk about that. Now, we are up well and above what is Friday's high. We're 1.25% here in the Russell versus, the S&P is not even up 1%. Neither is the Dow or the NQ. They're all up, 0.7 to 0.8. So the Russell's really the strongest index here, and we are going to be running up into the top side of the range. I want to be aware of where the 78% of this range is. That is all the way. That's going to be up towards this 1567. So there's actually a extension that we were in last week, if you guys remember. That negative 61 is going to line up, and this is just where I think we go until we come into our next resistance levels. It's 78% of the range. It's the negative 61 of the extension, and it is a daily swing mark high, all within a point or two of each other, starting at that 1567 area. Now, if we go down to the hourly chart, what we have is an extension that's just totally blown through its profit targets. This extension initially traded on Tuesday of last week. We completed on Wednesday. We traded the same anchor new high once. We traded the same anchor new high twice. We've blown through our profit targets. There is the possibility that we begin a high to high from 1527 to high here. And that is going to line up with the previous resistance level, those highs we broke out of. This will be the previous high of Friday. Will line up with that extension here for the Russell. So I'm looking at a support level of 1541.8 and as resistance just above, starting near like 1566. Moving on to the S&P 500, we have still not quite tested the full halfway back short from what is the high of September 2nd to the most recent low on the 24th. Now, Perry mentioned this morning that the volatility really probably won't pick up until we have the earnings event. So that means we'll, come into these resistance levels, back off, come into support levels, back off. But we have earnings picking up and starting next Tuesday. So there's really not a whole bunch of new information to push us one way or the other. So we do need to be aware of that halfway back short above us. It's a 33.92 half, as well as there's a daily leg start. There's a daily leg start at 33.9575. Okay, so those levels are above. Below us. I would love to see this full traditional trade from what is the Thursday low of the 24th to high. That's all the way down at 32.93, and we'd be a retest of Wednesday's low at this point in time. Now, we are most definitely at the top of the range here. Last time we came to the top of the range, there was a 50% retracement that held from the low of Wednesday to high, and then we made a new high, fell all the way back in. We've broken out of shorts here again. There was participation on Friday. We're above those levels now. I'm going to look at this Friday low to high to give me a general level of support. And that is going to be a 33.34, but really bigger levels here, 32.93 quarter going into the week. We have a daily previous low behind it. If we did get down there, that'd also be a gap fill. I'm still looking at that 32.84 half, and then above us, 33.92 half, the full 50% retracement. Those are the most significant tradable levels I'm looking for in the S&P 500 over the next couple days. Moving on to the Dow, which is already traded its full 50% retracement from the high of what is September 3rd. Now, what's interesting, the high here is actually a leg start in the Dow, this dashed white line, and guess what the low is? It's also a daily leg start. So there's two daily leg starts that have so far been the high and the low here. Now, I also have this dashed resistance level behind, but I'm going to continue to treat the 27,956 zone here as a resistance. We traded it once, and when we traded it, we did back off quite aggressively. Now, the Dow did run into this full halfway back long. If you remember last week, the Dow had the most perfect long completion. It was that Thursday, September 24th low to the high of the 29th. We pulled halfway back. We ran up completed targets, and then we came full halfway back long again in the overnight session on Friday on the back of that Trump news that came out about him having coronavirus. Now, right back to the top of the range. This could be a ping pong match here for the remainder of the week, where we are running into the 50% retracement short at 27,793, and then maybe even coming down and retesting the long level here. So I'm just going to be paying attention to, if you want to be aggressive, the thing I'd watch, that Friday low to high gives us a 27,466 level of support. But I actually really like this zone down here, this 38, if we do retest this 38 area. Moving on to the NASDAQ, which has traded its full halfway back short. That traded last week. Now we closed on it Thursday, opened Friday, and then right to the low of the range. The NQ was really in its own market on Friday, participating aggressively on shorts. We had the full 50% retracement short in the NASDAQ complete its profit target. The low there is the completion of that target. And I'm going to actually leave up that draw and continue to treat this as resistance right now. It does look like there is a next traditional move getting sold into here. But at this point in time, we've spent probably like 10 hours consolidating on this short. We'd only want to be aware if we completed that profit target. And then the full halfway back long here, and the NASDAQ, definitely something to pay attention to here on the first test. That is going to be a gap fill. The 50% retracement long from the lows of 2 weeks ago is a gap fill for the NASDAQ. The gap is from September 25th. It's an 11,132. That is definitely a significant level of potential support here. Also lines up with what would be the downside target of the short we are inside of. Moving on to CL, the volatility really picked up in that one last week. We had a big move. What was that? Tuesday, retraced it Wednesday, got slammed Thursday, Friday, and then the volatility straight back. If you want to talk about a market that's moving intraday and has a lot, we're up 4% right now. We were down 5% Friday. We were down 5% Thursday. We were up 3.5% Wednesday, and we were down 4% on Tuesday. So there is not a market we look at that has the volatility that oil does right now. Coming out of the lows, we have broken an extension. We have failed what was the short trend. And so far, what we've held is the Sunday night open too high. A perfect touch, a perfect completion. The next traditional is just at 3 a.m. European session low to high. And right now, we have not yet traded that support. 38.24. 38.24 would be the 50% retracement long to look for. It's just that next traditional from the European session low to high. Moving on to the USD JPY. Last week in the Jack's Room section of the Startup Trading Discord, this is a setup I'd highlighted. Now we came into it perfectly. I think you could maybe even argue this was a full halfway back long. Let me actually check here. That low to high. Yeah, you could argue that there was a front run there, but we really stuck this 61 of this next traditional. We have broken complete up, validated our upside target, and we have a full 50 percentages long. If it can come down into it at 105.31, that is a valid setup. That is a absolutely valid setup. Now it's a gap fill as well. So 105.31, the full halfway back long there from Friday's low in the USD JPY. And then moving on to the Aussie dollar, which is right at the top of the range. I want to be aware where this full short is. Oh yeah, basically is the current high. We've had a nice move out of last week's low. Very nice move out of last week's low. And we are just kind of bumping up on the top of this range. I'd love to see us come down into the 71.07. The 71.07 full 50% retracement long from Friday's low of the 25th. Other than that, as of right now, if we complete this traditional long, you can draw the next measured move, but we've already had that first test. So I do still think, and I would still respect this resistance at 72.09 as well. 72.09. Moving on to the euro. The euro had a traditional that traded perfectly on Wednesday. We traded the 38, and then we've just begun a bid here from Sunday. At this point in time, the only thing I'd like is just that full halfway back from that middle of the range Wednesday. Last week, that swing low to high, retesting. This would just be a retest of 117.27, which is the beginning of the move up that started at 3 a.m. I'm going to set an alert there. Just coming back into the bottom of the range. Moving on to the pound. Coming just close to completing this profit target. If and when we do. And we could definitely roll over from this resistance level. There's a lot of resistance here at this 130 level. Previous lows, you can see this. We're going to be running right up into this past the completion. So we could definitely see a reversal here in this pound. It's been very tough to get above 130. So I'm just going to be paying close attention to that. And then the USD CAD. Now this is going to kind of determine what we're going to do as far as make or break. We had this next traditional, which I had mentioned on Thursday, and it had a great reaction. 132.67 traded all the way up to 133.30s, over 60 pips off of that support level. But now we're coming into a second test, and we've failed here from a trend line and a previous swing high. This is a trend line and a previous swing high. So if we do move lower here, I would expect us to potentially break down to the 132 level. The 132 level. So I'll just wait to see what happens, whether we're going to break down. We'll begin looking for a potential entry into the trend, or if we hold this. But at this point in time, we just have to treat this as support until it breaks. And then gold, this traditional I keep wanting to see is not happening. I believe we held the extension that we began last Monday. It's very strange. It's a 1857 half to high. We traded it here. We traded it here. And then we traded the 38. And I guess that was, yeah, that would just be the 50. This I would love to see, and it just hasn't happened, the full halfway back from Thursday's low to high. We just can't seem to be able to get down there. But that would be very ideal if we did. Yeah, at this point in time, I don't trust a continuation. If we can clear 1923 is the previous all-time high from 2011. We need to get above 1923 in gold. If we can clear 1923, I think I'll start being a little more aggressive with the pullbacks. But right now, it's been up, straight back down. I'd love to see this 1887. I bet that gets front run. So be prepared for a front run if we get down there. Silver, a little more aggressive to the upside as far as this price pattern. It needs to clear this 24.40. We can't get above 24.40, but it's just in a bullish wedge on the higher time frame. I don't want to say anything more aggressive like that. The higher time frame support is this 23.78, and we're just kind of riding this trend line up. Just kind of riding it up and unable. If we start breaking above the high of last week, which occurred on Tuesday, I do have some major resistance near 24.83. And that's a traditional lined up with previous resistance levels. So even a breakout, I don't expect anything too fancy from here unless we came into this full long, which is well below us. It's at 23.17, and that could happen this week. So I'm going to set an alert there. But that's going to wrap up my morning trade plan. If you enjoyed this content, please give this video a thumbs up. If you know anybody who was interested in futures trading, might find it useful, feel free to share it with them. Highlights, the volatility, guys, definitely in oil. It's up 5%. I mean, literally, we've just been moving crazy. So if there's one market to day trade, it's that. There's nothing too excited with me for these indexes. I think this could be a little more of a boring day here, and I'm just going to be paying attention to those deeper pullbacks. I'm going to share my levels with everyone in the Startup Trading Trade Room, and if you're not in there, click the link below and join. I'll see you guys there. Take care.